Shares of Block are still down about 75% from the pandemic peak. Now, shares are up about 75% from their low in 2023. So, this is really a tale of, depending on when you bought the stock, you could have either done really poorly or really well. Now, I've held shares for many years now, but well before the pandemic. So, I think the long-term trajectory of this company is actually pretty good. And if you take a step back and look at what investors are paying for today and how strong Block is as a company, how strong the Square ecosystem is, how strong the Cash App ecosystem is, I think this is still a phenomenal investment long term. Now, it's likely to be extremely volatile, like it has been over the last 5 years. But if you are a long term investor like I am, looking for those asymmetric 10x potential opportunities, I think Block still has that potential. So that's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Go to fool.com/ASYM for their top 10 stocks to buy right now. Let's start with a couple of charts that just sort of lay the overall groundwork from a 10,000 foot level for Block. You can see this first one is two different types of revenue. Transaction-based revenue, that's revenue that Block is making on each transaction. So the way that this company started was with the Square device, and then they would just take a small cut from each one of those transactions that customers are paying for. So if their standard fee is 2.9%, they take about 1% of that, a little less than 1% of that. And then the additional about 2% goes to companies like Visa and MasterCard and the big banks. And then Block has to run their business on about that 1% of revenue. So that's not a particularly profitable business for Block or really for any of these transaction-based companies. What is profitable is the subscription business. And that's what this blue column is. You can see that over the last 10 years, the company has gone from effectively no subscription revenue to $5.6 billion in subscription revenue. So this is a variety of different things. If you have used the Square app before, you know there's all kinds of different add-ons that you can have. Calendars, you can do scheduling for employees, you can take out loans. There are dozens of different features that you can add. They charge when you continue, as you add more devices, if you're using the Square checkout device. So you add all of these different fees together, and you suddenly get a huge business for the company that really rivals the transaction volume business. And this is really the reason the financials have gotten better over the last few years. Now I'm going to look at profits in a couple of different ways, but this really tells the story. The first thing I'm going to look at is the two segments that I've covered so far, transactions and subscriptions. You can see that this transaction gross profit has grown basically in line with revenue, now $2.57 billion worth of gross profit. Now, that doesn't include the operating expenses that go into running the business, but that is that segment. And you can see, like I was talking about earlier, the subscription-based gross profit is much, much higher, now generating $4.6 billion in gross profit. So where you really want to see Block growing is in that subscription revenue. Now, transactions are kind of what makes the business run. This is fundamentally a transaction-based company. But the more of those add-ons that you can get from a subscription side is what's ultimately going to pay the bills and make this company very profitable. Another way to look at profitability is in the Cash App and Square App segments. That's what this chart shows. And again, you can see that the Square app has done very well. Gross profit has more than tripled since 2018 from $1 billion to $3.4 billion. That's the blue column. But where a lot of the growth has come from is in the Cash App. Now $3.7 billion worth of gross profits coming from the Cash App. And there's a variety of different ways that Block is making money from the Cash App. It's making money from the debit card. It's making money if you're doing instant transactions. It's making money from advertising. There's a bunch of different ways that they're going to take a little piece of the action every time people are using the Cash App. And that's why this has really grown in popularity and is generating very, very profitable margins for them. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, there are two reasons that I think Block is fundamentally in a very strong position from a valuation perspective and why the stock has a lot of potential over the next 5 to 10 years. One is that Block owns the ecosystem in a way that most companies don't. It controls assets for both buyers and sellers. Remember, the Cash App is really a consumer app and the Square app is a business app. So unlike most companies, Block has the potential long-term to reduce the fees that happen between those two different apps. If somebody is paying for something with the Cash App and they're paying on a Square device, instead of paying that 2.9% fee to the credit card companies, Block could simply use different rails. They could use cryptocurrencies. They could use ACH transfers. They're basically moving money from one pocket to the other, if you will. So I think there's a lot of opportunity to lower the costs there. And if you're able to lower those transaction costs, then you're able to lower what you're charging customers for those transactions, thereby making you a more attractive partner as a point of sale tool. If you're a more attractive partner as a point of sale tool, people are going to be paying more for subscriptions. So I think there's multiple points of upside there because of the fact that they own both sides of the ecosystem in a way that most companies don't. But the other thing is that investors are getting a relatively good value. Even if some of these disruptive things don't happen, I think there are still a lot of tailwinds behind digital purchases, e-commerce, and all of the businesses that Block is involved in. So I'm just going to get into a few of these metrics here today. On a forward basis, the price to earnings multiple is 23.6. Not the cheapest stock out there, but I think there are a lot of opportunities to improve profitability in the future, especially as a lot of those subscription revenues continue to grow, and that's extremely high margin. Now, management and CEO Jack Dorsey specifically need to get focused on costs, specifically operating costs. And I think that's ultimately the biggest question is, can somebody like Dorsey focus on the bottom line in a way that he has never proven to in the past? May actually require a management change to fulfill the potential of this company. But from a valuation perspective, relatively reasonable. Enterprise value to sales multiple on a trailing basis, that's looking backwards, is a little under 1.9, and revenue has grown over the last 10 years at 56%. Now, one thing I haven't talked about is Bitcoin and the Bitcoin trading, the way they recognize revenue there. They're taking Bitcoin onto the balance sheet. So every time someone buys Bitcoin on the Cash App, they're not just taking a small transaction fee. So they're generating revenue from every single dollar. Very low margin. But that's one of the things that skews some of the revenue numbers. So I haven't talked about that here, but the actual enterprise value to sales is a little bit closer to 3 rather than that 2 number. If we look at the forward enterprise value to free cash flow, that is just 21 right now. And again, growing consistently and the opportunity to grow in those high margin segments. So I think you add all of this up and Block is really well positioned in the payments market, in the subscription business, having both sides of the ecosystem with a consumer app and a business app. Now they just need to translate that into a profitable business. Given higher interest rates, a lot of executives, a lot of companies that grew up in this zero interest rate environment have started to make that transition to more profitability. We have not seen Block do that yet, but I think over the next few years, we will likely see that as rates stay at an elevated level and don't go back to that 1% to 2% that we saw for so long. So I think Block is still kind of a turnaround play on the bottom line, but a lot of potential here. And especially given a reasonable valuation, if your time horizon is 5 to 10 years like mine is, this is going to be a company that's going to be around and very sticky for the customers that use it. But what do you think about Block and what are your hesitations? Like I said, mine is really that Jack Dorsey has not proven the ability to generate a lot of shareholder value and profits for a business. So wouldn't mind seeing a new CEO running this company, but we'll see if that's in the cards. Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing, everybody. Thanks for watching. See you here next time.